Afternoon, guys. All right, so welcome back to a wonderful video for myself. I know it's been a while, but I'm happy to get on with you. So, as we all would recall, uh, yeah, it's been a while actually. It's been a while. So, first of all, let me make this video a introduction video of myself and a video whereby I let you guys know how far with me. I know you're not seeing my face right now. Let me host camera virtually. Let me host camera virtually. Okay. All right. I can't see the effect of that on my recording. Anyways, let me stop it. So it's going to be a recorded video actually. So I have my videos and some other on some other of my I have my image on some other of my videos, right? So it's been a while actually. And actually what I want to do is kickstart my YouTube channel back. Yeah, kickstart it back, whereby I get dedicated to at least making analysis day in, day out. So anytime I want to analyze the market, I come on here and then I do my analysis day in, day out, and that will be basically it. And then I'll be dropping some nuggets, some advices, and every other thing. So yeah, basically for today is a reintroduction, and then we go on. I tell you how far it has been with me. Not going into too much detail actually, um, not telling you where I am at or something like that, but just how far it has been with me, how's life been, what stage am I at, and yeah, as per trading, what stage am I at, and all of those things basically. Yeah. So once again, my name is Odwanyo, right? And I'm a forex trader basically. I'm a forex trader. I've been a forex trader for a while. I've been a forex trader for a while, and trading has been wonderful. It has been a learning journey for me. It has been a learning journey for me, a wonderful one. I'm being honest, a wonderful one whereby I've not just learned to trade, but now I'm building tools around trading, right? I'm building tools around trading, which is one of the many reasons I'm dedicating myself back to this YouTube channel. So hopefully when the tool is ready, I can share it with you all, my wonderful viewers who are also forex traders like myself. So you can utilize it, you can learn from it, and it's just going to be an educational tool. Yeah, it's going to be priced, but for the start, some people are going to be testing it for free, so that's going to be a nice experience. All right, so let's get into the chart for today. Let's get into the chart for today. um my watch list does not actually capture what I'm looking at. This watch list does not mean I'm looking at everything on here, but let's start with gold. Let's start with gold. Presently trading a prop firm. Yes, presently trading a prop firm. Not going to be mentioning any name. Presently trading a prop firm, and basically, I'm on drawdown right now. I'm on drawdown right now, but I'll be out of drawdown by God's grace. And if I don't get out of drawdown, if the account goes, I get another account. So that's okay. So sometimes you should not try to like scold yourself too much, right? You can make losses, right? So losses is normal in the forex market, though man is an island of, like, there's no perfection in this forex world. There's no perfection in this forex world. What you just have to do is you have to learn to accept your losses. You have to define your risk per trade. Once you've defined your risk per trade and you take the trade, if it goes in profit, wonderful. If it goes into a loss, it's still wonderful. You know why? Because at least you are losing the amount you set out to lose. It's not as if you are losing an amount which you can't take up or something like that. But I hope you understand me basically. So one thing I've learned about the forex is a is a free flow game, right? Not a game per se, but it's a free flow environment, right? You just come in, you make your profit, you make your losses, and you should be comfortable with either one which you are making per time per season. You shouldn't try to like you shouldn't try to like scold yourself, overthink losses. No, just learn from it. Forex what is all about learning, adapt, evolve, adapt, learning, and evolving. So that's just Forex word for you and for me. So that was one thing. Yeah. Um, Before I jump into the charts, how profitable have I been? So I've not been trading much. Actually, I've not been trading much because of capital reasons. I've not been trading much. But in terms of profitability, I would say I'm in my sustenance phase, right? Where I make deposits, I make profit here and there, make profit here and there, make losses here and there, not blowing an account, and then withdraw all of my capital because I need to pause trading for a while and go into other things. Basically, or majorly focus on my academics. You understand? Because yeah, so that's it. So no more talks from me. Let's get into the chat. And then yeah, like I said, this is a recorded video, please. So I'm not showing my face for now because of the camera issues and where I'm at right now. Where I'm at right now. I'm in hostel basically. And it's not the most beautiful places you want to see online. Anyways, so I'm going to be starting off with SAE with a top-down analysis, majorly starting with from the weekly chart. Let me go on to delete everything on my chart. Okay, all right. So as you all would know, we are in actually the good have been trading funnily these days because of events going on globally and lots more. So as a trader, you have to like trade carefully, most especially when things are not trending. Most especially when things are not trending. We have a choppy market. The market is just moving from here to there, come back, take you out, gaps over the weekend, and all of those type of things. So right now, it's not the best of advice to be holding on to a gold trade over the weekend. It's not best of advice to be holding on to the gold trade over the weekend, right? It's not the best of advice. So that's one of the things that I can say stands out for me. It's not the best of time to be holding on to gold trade over the weekend. Yes. So for this, so what we are doing is we are looking at the market trend, right? So let's look at the market behavior from the last 5 weeks. That's how we are analyzing the chart now. So we look at the market trend. We majorly look at it from the last 5 weeks. So we have the first candle here, we have the second candle here, we have the third candle, the fourth candle, and the fifth candle right here, right? So majorly the market opened gapped up on this candle to open. Let me just make that view. So the market gapped up on this market to open here, and then it first of all traded downward. I don't know, it might have first of all went up or before coming down, but majorly from the last 5 weeks we have this low, right? We have this low. So let me just capture that. The price on that low is the price on that low is 441743. So let's just adjust that accordingly. 4417.43. All right. So that's the low. Yeah, that's like 5 weeks ago, and then we have the high from 5 weeks ago, right here, right here, right here. So what do we have? The high as four. So I'm looking at it from this point actually, 4891.54, 4891.54. So yes, so we are trading within this price range from the last 5 weeks, right? Obviously, we're in the premium side of the trade right now, and if like we are above 50% of this particular market move from the last 5 weeks. We are above 50%, obviously. Yeah, we are above 50%. And you see, so we are just shy of 50%. We're just shy of 50%. But one thing I'm going to do is for this week, I'm going to okay. So let's just look at this. We are trading with this range. We're trading within this range. We're trading within this range. So let's just start this 5 weeks, 5 week, 5 week high. So yeah, and this is 5 week low. So it was meant to be weeks, right? 5 weeks low. So we are trading within this range right now. We're presently trading within this range. So let me just Let me capture the midpoint. Let me precisely capture the midpoint. All right, so let me copy this coordinate. Oh, let me see, 0.54. I didn't adjust this accordingly. So let me copy this coordinate and make it the high for this one. And then let me copy this coordinate also and make it the low of the week. So I just want to walk you through the process of the analysis. It might be slow, but it will pay off. It will pay off. So let's capture the 50-week, the 50% retracement right now. This is it right here. So that's like from the last 5 weeks, from the low of the last 5 weeks to the high of the last 5 weeks. So the 50%. Are we trading from there? Obviously not, but it's just a way for us to map the chart. Just for us to map the chart. So it's on 4654.485 and set the style. So let's just thicken the line a bit, and then we just have it 5 weeks mid-level, right? So that's the mid-level from the last 5 weeks. So let me take off this. Now from here, we know where we are at. So let's go to the daily time frame and see what we are doing from the last 5 days from the daily time frame. Obviously, right now, the market has been dropping from the last 5 days. Market has been dropping from the last 5 days. Market has been dropping, and yeah, so 1, 2, 3, 4, 5. From the last 5 days, the market has been dropping. The low is very much closer to this one. The low is very much closer to this one, right? The low is very much closer to this one. And one other thing is we have a gap here. We have a gap here. We have a gap here. Let me see this. We have a market gap here, and we have a wick right here. So what you can do with our wicks is it can serve as a support level for the market, right? It can serve as a support level for the market. That's just basically saying 50% of this. So let's just capture this right here. Just 50% of it. So that I'll show you what I mean now. Let's see. So 50% of it can serve as like the way it did here. So this like it served as support here, and then the market went up, came like this week was before this high. Don't forget that this week was before this high right here. So at one point this was the market high, at one point this was the market high, and now this is the market high. So don't forget. So this week, this one right here on information, don't always like ignore your wicks. That's one thing. Don't always ignore your wicks. So let's say the closing price and then the low. The closing price 4676 48745 4676745 4676745 and the low 455385 4553.85. So yeah, so we've captured this now. We are here. The market, don't let me say anything yet. Don't let me say anything yet. Let me just continue with this particular setup. So let me continue with this particular setup first. So we have this price zone here can is like this this range right here, this rectangle is a support for the market, right? That means like it's a demand zone. So majorly if you're able to break it, first off break below the 50%, close below the 50% precisely, then maybe we can see a good continuation lower. But if we're unable to do that, we might still be staying above. We might still be staying above. We might still be staying above. And then I'm not saying too much of terminologies for now because I'm not the terminology guy. I'm just a person that I'm not the terminology guy, maybe because most likely if I'm saying terminologies, I can misplace them. For example, now we have some people that have sat down to study and they've they've crammed it that maybe this is an FVG or something like that, break of structure and all of those things, but that's not me. I didn't cram it. What I did is I tried to just understand how to read it, right? Understand how to read it, then let the market move, let the market move, let the market determine how I interpret the chart. Like I'm doing counting 5 days, 5 week, then 5 days. As you will see, we go to 4 hours, we do 5 count of the candle. It just wants to check if there's any immediate trade within the trend. If there's any immediate trade within the trend that we can just try and take roughly 100 pips, 200 pips, or something like that. Good moves, good moves. That's just it. So 5 days we've been dropping, the market has been dropping from the last 5 days, and there's no need for me to capture the particular low because I believe it's trying to just take off this midpoint, right? Trying to take off this midpoint. So yeah, let's see if we're able to fulfill that. So but I can capture the high 1, 2, 3, 4, 5. So this is the highest high from the 5 days range. So I can capture that really. Yeah. So basically, if I come back here tomorrow to analyze the market, you still see this particular markup. You still see the particular markup for a 33.405. Okay, for a 33.405. For a 33.405. There might be background noises, like I said, I'm in the still. I can't actually I don't have power over that. I don't have power over that. I apologize if there's any background noise. So these 5 days high. So the weak and the low, they are more or less like relative low. The 5 weeks low, mid level, and then this low, they are more or less like relative low. So the market might want to like break downwards and crack it. Get it might want to crack it, and then we have this gap right here. This market gap right here. This market gap right here. If we capture the market gap, let me show you this. If we capture this market gap right here, you see what's happening. Have a call. Let me see if I can pause recording. Okay, I'll answer the call later, or I'll call back later. Let's just proceed. I'll call back later. So we have the five, we have this particular gap right here. So which can see the 50% of that particular gap also it coincides with, is like almost relative to the 50% of this overall week, right? So we can take this off and just leave that week there. Can take that off and just leave that week there. Yes. So let's drop down to the 4 hours, which is where the market starts to show us highs and low and all of those things, right? Where the market starts to show us highs and low and all of those things. And look at the awesomeness of this. Like we have this eye here, we have this eye here. It's just like this I believe here. No, this is not this week. This was last week opening market gap down and then went back up to fill the gap and then started dropping. So yeah, went back up. So it didn't break above the close the last week opening. So there was tendency for it to price down. So that's just it. That's it. Yeah. Let's see what we have now. So basically we are now on the 4 hour time frame, obviously, and we have weeks already that we are looking at. So right now there's no much of a trade for me on gold. Right now there's no much of a trade for me on gold because reason being that one, we are still like there's no structural break. So what you wait for a structural break, you wait for an FVG, or here FVG I would say it. You wait for a gap, like you wait for a decisive price movement, then you wait for a retracement, and that gives you a wonderful conviction. So the reason I'm not trying to use terminology is because I don't want to be misplacing them over each other. You understand? It can be insultive on those people who have sat down to learn it, who have taken time to know the names for what they are. So yeah, so that's why I'm not mentioning the names that much. That's why I'm not mentioning the name that much. Maybe when I start giving them my own personal name, you know, then nobody can hold me for that. Basically, let's check last 5 candles. 1, 2, 3, 4, 5. So what do we have here is just like market gap down. So this, yeah, so this week. This week now. So this what happened for this week. We gap down, we trade downwards, we break it, and I have a little conviction. I have a little conviction. And what's the conviction exactly? I'm going to show you. I might be wrong. I might be wrong. But I think this market for this week is still going to trade higher. For this week, I think it's still going to trade higher. I think so. And the reason being that, let's see, 1, 2, 3, 4, 5. Um, so this is like last 5 candles. We basically went up, then we are back down. But we had a gap here. We had a gap here. So let's take note of the gap. Let's take note of the gap. Yeah, this gap here. Yes. So we had this gap here. So this was like the gap of the week into this new week that we are in. Let me capture that precisely into this new week that you are in. So that's just going to be like my map up for gold. And we have the low 4705, 465, 4705. No, I meant to capture the closing 470975. And then the opening price of this candle is 4696,875. You see, this method of trading is very straight to the point. Charlie, very straight to the point. Just look, I just drawing rectangles. I just drawing rectangles, right? Or don't be deceived. So let's capture the eye. Let's capture the eye. So this eye right here. This is the eye we came to form. So these are like this. These are like structural levels. You now start waiting and looking at the market to start breaking it. Start waiting for the market to start breaking structural levels. This is what they look like. Oh yeah. So this is what they would look like. So let's see what we have now. The eye for this is the eye for this is 4729965. 4729965. 4729965. Okay, so and we have the low. This particular low we have here. We have this particular low from the last 5 4 candles. Oh yeah, last 4 candles, right? So I'm going to capture this low for a reason, because but I think from this eye, we might test this 50%, right? We might test this 50%. We might not even just test it, we might like clear it and then possibly go, but market might do it and the market might not do it, because one thing is, if you are going to continue higher, you don't want to see the market close, you don't want to see the market close below this particular candlestick low. We are going to like continue higher, which I'm coming out later. So let me capture this low. This is going to be 467245. 45, and this is going to be 45, and that's it. So yeah, so this from the last 4 hours actually. This from the last 4 hours. We have the opening week gap. We have the opening week gap right here. Let me label that. The opening week gap. This test opening week gap. So we have the opening week gap. We captured both the high and the low at the same time. So let me just take the test. Let me take the test. Let me do this like this. Let me just take the test. I thought we just recorded the test. Opening wick gap test. No, test to the right. Yes. So it doesn't disturb us at all. So let's go down to the 1 hour and see. Yeah, it's obvious from the last 5 hours in the 1 hour we have actually been traded down. So that's normal. That's actually normal. That's actually normal. Okay. So yeah, where we are at right now, very at a good level. At a good level. At a good level. And gold is actually giving us this selling momentum. It's giving us this selling momentum. You know. So um, if nobody should be looking to buy actually, nobody should be looking to buy for now. Not at this point, not like trying to buy the low. You don't try to call a low in the market. You can call a low with structural retracement, that's okay. But and I keep saying structural as if I'm a structural boss. I'm not. I'm someone that is getting influenced with the market trend. I'm someone that is getting used to the market trend. I'm someone that is learning to look at the market chart and trade with what the chart is telling him. And that's just what that's the phase I'm at right now. That's the phase I'm at right now. So basically, maybe we might just be looking at just SAUSD and BTC because I'm analyzing slowly. Actually, I'm analyzing slowly, which is very, very okay. Very okay for me. Yeah. So we have this low from the last this is like the day's low that we made for this today. For today, this is like the day's low. So we made the high, we trace it, we trace back, right? So we made the high, we trace back, and that's basically where we are at now. So we are back to the daily low. We are back to the daily low. So one thing that is happening now is first off, I think no, not I think now. Um we have done something very precise first. We have done something we have done something very, very extraordinary because we've closed below today's low. So since we've closed below today's low, I think I will still come back here. It is expected for the market to still come back here since we've traded below today's low. It's expected for the market to still come back here. If you are trying to capture any five, 1, 2, 3, 4, 5, if you're trying to capture another 4 hours range, it's going to be within this range. Still going to be within this range. So there's no need for us to capture that. I believe there's no need for us to capture that. Yeah. So let me capture this one for this is a 4 hour 5 candle high, as you would agree with me. I just 4 hour 5 candle high, and then this is the 4 hour 5 candle low. Okay, so we've broken below this, we've gapped down, we've closed below this low. So we'll come to this point before we start thinking of anything. We'll come to this point. So now we now have to look at if there's an opportunity for us to come, if there's an opportunity for us to be in a trade that trend when the market trends downward, right? So we have this FVG right here that can serve as an inverted FVG right here, right? And then we still also have a another FVG here for this particular gap. But the question is, which one do you want to go for? Which one do you want to go for? Um, so you see something about trading is trading, there's no strict rule. There's no concrete rule that this like yes, there are rules, but no rule is like concrete. You should look at the chart, you should trade, you should look at the chart, not like you're trying to follow a strict rule, right? Let the chart show you the rule that is in charge at the moment. So say for example we add the market retracement to this 50%, which is very okay. You don't want to see it go above 50%. So maybe you place a trade here. then you expect the market to come down, right? Then you should just set your stop a little bit above this particular inverted FVG. You expect it you expect it to hold, right? You expect the market to obey it. It hasn't obeyed it, it broke it, you expect it to obey it now, right? So that's it. That's that for this one. And then the next thing is now for the next trade, idea is that for the next trade idea, you don't look at any of this, you wait for the market to come to this point exactly before you place a trade, right? And you set your stop loss somewhere around here. So that's one thing, but I wouldn't still trade that way. So let's go down to a time frame that can allow us the liberty of being right or wrong, whereby we still have like a smaller stop loss to set. So let's see, let's go as low as 15 minutes. Let's go as low as 15 minutes. So let's go as low as 15 minutes. Now see here we're trying to what? We're trying not to close below it. We're trying not to close below it with utmost precision. We're trying not to close below it, and we did. We still close below it. Let me just adjust this a bit. We still close below it, right? So from the 15 minutes, are there any FVG we could trade from? Let me take this off first. So from the 15 minutes, we still have the inverted FVG, but this time around is very, very bold, very, very bold. Very, very bold. Yeah. So this time around is very, very bold, very, very bold, very, very bold. So from the 15 minutes time frame, I have a trade idea on this particular on gold, right? I have a trade idea on gold. So note, when this video will be coming out, most likely the trade would have played out because it's a recorded video. It's a recorded video. So the trade would have played out. So I just want to walk you through how I analyzed it and whatnot. I just want to walk you through how I analyzed it. So the trade idea on gold will be somewhat like, okay, no, it's a short trade. If we get a retracement into this 50% of this, I'm going to set a trade right here, and then I'm going to target this, right? So that's a 1 to 5 risk reward. So this is just it, the 1 to 5, approximately 1 to 5 risk reward, risking 64 pips, 64.3 pips roughly, and to get about 324 pips roughly. So that's a good entry exit strategy. And in case of you are someone like me who always want to enter a trade, that is because the market is erratic. But I'll not advise you to be someone like me, because if it goes against you, you still lose much, right? So you might want to wait for the market to reach here first, give you a confirmation, like so you set like a stop order below. That what that does is it gives you a wider stop loss. It gives you a wider stop loss, right? So that's what it does. It gives you a wider stop loss. So basically that's the trade idea for gold. That's the trade idea for gold from my own end. Note, this is not a trade advice. This is just me showing you how I analyze the market, particularly personally. This is how I analyze the market. If I were to place a trade, this is how I would place it. Note, I'm not even trading with my own cash right now. So we don't want to be following someone that is not trading with his cash. Yeah, so that's it. I would just set a timer around here. I'll set a timer just there, and I'll set a timer. Set a timer right there. So when market comes to that point, I'll place the trade, and then I might place it even while doing this recording. So to the next price, to the next to the next pair that I'm looking at, which is BTC. I'm looking at BTC. I'm looking at BTC. I will trade ID on BTC. As you can see, I will trade ID on BTC before now. I will trade ID on BTC before now. But I'm going to go on to delay the chart, start over again, and walk us through how things would play out, remove our 23 drawing. Yeah, so it's removed. So let's start from the weekly. Starting from the weekly, yeah, it's okay. So we all know Bitcoin. We had a good one on Bitcoin. They had a good one. That's people that made profit on Bitcoin. I beg. If you were not trading then, so you don't have to say yeah, you had. There was a good one, so I didn't trade. I didn't make any profit from it. Yeah, I was not actively trading. I was not actively trading, and if I were even actively trading, there's no guarantee I would have made profit from it, right? So that's just the honest truth. I could have lost. So it's normal, like I say, it's normal. So from the last 5 weeks, actually, Bitcoin had moved, I think, roughly 3 to 4% from the last 5 weeks. Let's see. Oh, I undermined Bitcoin movement. From the last 5 weeks, Bitcoin had moved from the last 5 weeks roughly 16%. So that's cool. That's cool. That's cool. So let's just capture the move. Let's capture the move and see. And it's had moved up now in an uptrend direction, in an uptrending direction. So we have 1, 2, 3, 4, 5. Yeah, basically this is our low. This is our market low from the last 5 weeks. Let me capture it with precision. Let me capture it with precision. So if I place the trade on gold, it's going to be allotted. You're going to see it, right? But you're not trading it. So that's just it. And if anyone is calling a trade, if anyone is calling a trade, you're not meant to just place anybody's trade randomly, right? You're meant to do your due diligence. You're meant to study 696. I'm meant to study, and as traders, like this trading thing is not all that difficult. It's not difficult. It's just that you want to buy Lambo overnight. It's not all that difficult. You just have to embrace the learning, and if it's if you end up being a profitable trader, wonderful. You make your profits, you are good, and you invest, you diversify your portfolio. You diversify your portfolio. It's not as if I have any portfolio to diversify, but I say the brokers give the best of advice. I think it's true. But anyways, you're still on the journey. You're still on the journey. You're still on the journey. So I've marked the 5 weeks market high, 5 week market low. And please, there's nothing like, oh, this is the best way to trade. Like I say, there's nothing like that. I'm just here, just thinking out loud, right? Just analyzing the charts like anyone would. I don't know. Well, I'm just analyzing the chart. I'm just analyzing the chart. Let's go to the last 5 days. Okay, we just started today, and then the market is obviously falling. The Bitcoin market does not actually sleep. It doesn't sleep. It's that market. Yeah, is him. Is the guy. 1, 2, 3, 4, 5. Wow. So this one is something we should take note of. It's very, 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 very important. It's something we should take note of. So 1, 2, 3, 4, 5. From the last 5 days, the market low, the first low the market formed from the last 5 days before it went on to attack the high from the last 5 week, right? It formed this before this, obviously. So it was unable to break this, then we are dropping from there. So from the last 5 days, this particular low, I would highlight it very well now. This particular low, let me see, 76988. This particular low, 76988, 76988. So this particular low, um so 1 day low, so like from the last 5 days, but that's just like the daily low, you understand, from the last 5 days. Maybe I would find better keywords, or in the comment section you can give me better keywords. I hope you get it. In the last 5 days, we've done something. We've cleared the last 5 days low, right? But note, the fact I'm saying last 5 days does not mean like that's structural, that's everything. But it's just a way to capture the trend rather than trying to look at zigzags and all of these things. So you can use your trend count to look at market movement. Is it breaking a recent low? Is it breaking a recent high? Just find a rule for yourself. You know, the market does not move in wave pattern every time. So sometimes you just have to look at candle behavior. You have to look at candle breaking candles. And as time even goes on, I can go on to refine this rule more than this. I can say, oh, this is support, this is support. Now we have broken the support. If we retrace back to this entry, you can just, the market is a pace. You should not be static in your thoughts. You should not be static in your thoughts at all. You should not be static in your thoughts at all. So we have this 5 days low right here, but there's something happening here. There's something happening here. Always look to the left, very important. In that my last gold trade, I didn't look much to the left, right? I know. So always look to the left. So this is cool. This is cool. So this last 5 days low, this last 5 days, we count this one, we are still within, we count this one. So this is the next prominent low right here. This is the next prominent low right here. So yeah, so yeah, how do you want to count it? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So I would capture this low. Um, if you're in a downtrend, you can say, oh, we are coming to this low next. So what I'm counting 5 days low is immediate. Is immediate, right? I'm just using to get an immediate scope, an immediate idea. Obviously, I can't count all of the whole 5 days. There's a way we can capture it. I'm going to show you something. Let me see if I'm correct in that calculation. I would clap for myself. But let's see. Um, the low 74817. So what I'm trying to say, if Bitcoin is going to drop, so it might drop up to that low and target that low later on. But I'm still going to say something about that. I'm still going to say something about that. Jesus Christ, what did I just do? Control Z 76817. What am I doing? 76817. What am I doing wrong? Okay, okay. Ah, so I was looking at this FVG. I was looking at this FVG. That's from the 4 hour, from the 4 hours perspective. I was looking at this FVG that um if the market was going to like continue higher, we shouldn't break below this FVG. But now we've broken below the FVG. But that's not all. That's not all. This FVG is obviously very, very prominent. It's very big. So if you go to the 1 hour, if there is any other thing on the 1 hour, and 1 hour is also the same thing actually. It's the same. It's the same. It's the same on the 1 hour. It's more or less like the angry boy is very angry right now. And that's what's the name? And 1 hour is the same, basically. It's the same. 1 hour. So we've broken below this last 5 days low, right? So the next thing is we're not trying to catch support actually. We're not trying to catch support. We're not trying to catch support. For example, I would have gone back to the gold trade, but let it. I'm not trying to catch support. I would have mentioned some entry criteria. I'm not trying to catch support. Let me see whether I can say some entry criteria from here. Uh, for example, let's say for example, yeah, it has played out already, but anyways, nothing stopping us. For example, let's say we open the chart at this point, we counted 1, 2, 3, 4. Let's see, 1, 2, 3, 4, 5. So from the last 4 hour candlesticks, this the market structural low, right? So this is the last 4 hour candlestick market structural low. I'm just showing you how I could have called it. This last 4 hour structural low. I'll not try to capture it correctly. I'll just do it roughly. And then we have this FVG right here. So you see, so we broke it, we closed below it, we wait for a retracement back into this FVG, we sell from there, and then bam, we are down here. But it's easy. It's easier that it's easier said than done. That's one thing. But it's just a rule I've been trying to say over and over again. So you should get that. If I could have been saying it over and over again, then it's possible, right? It's possible. You can think in that manner. If we come to the 1 hour, you say, oh, there's no FVG. On the 1 hour, the FVG is very big. Like the FVG is very on the 4 hour, on the 4 hour, we have it as an FVG, not as no, yeah, we have it as an FVG on the 4 hour. On the 1 hour, you are like, oh, the gap, the market gap, that's this particular low to this particular high, they are very far apart, right? So you wouldn't want to use this one, obviously. You'll use the one that is like that gives you minimal risk. Now, when it gives you minimal risk, it does not mean it cannot go wrong, but it's just that if it goes wrong, at least you are not blowing your account. If you go down to the 15 minutes time frame, you see it's more defined. You see the 15 minutes, it's just exactly as one I've said it. So on the 15 minutes, so this is it here. So that's just it, more defined. So wait for it to like, okay, let's see what it does. It closes down, then you are hinting on this point, and before you know it, pop, 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 you are done. So that's it. That's one thing. That's one thing. That's one thing. Now we're on the 15-minute time frame. On the 15-minute time frame. So it's two things now. It's two things now. Structurally, where you can see that market is dropping. We don't need to call the low. We're not trying to call the low, but we are just identifying possible lows. We're not trying to call the low. We are only just identifying possible lows. We're not trying to call the lows. We're only just identifying possible lows. So, um, like for example, if you're someone that came like this and you had this right here from 15 minutes perspective, from 15-minute perspective, yeah, not much, but something. So you have this already. You can see that coinciding with this particular one. So this particular low here, this low for this particular low here is very valid. But now we've closed below it. We've closed below it. So we shouldn't be trying to like, oh, I'm trying to buy. Although you can. Yeah, buy trade can be crazy. But what you can just be doing instead is just follow the market trend. Follow the market trend, and then different people define trend differently. Different people define trend differently. So let's see. Yeah. So for me now, if I'm looking at Bitcoin, I'm no more looking at Bitcoin from perspective of a buy, not until we have a structural breakout. For example, we break this particular high precisely, then maybe a retracement to an FVG. That's what I would call a trade. I know I've not done any explanatory notes on the. I've not done any explanatory. I've not given any context on the strategy or anything or because there's no strategy anywhere. There's no strategy anywhere. You just wake up, you open your chart and you read your chart. There's no strategy anywhere. There's no strategy anywhere because yeah, there's no strategy anywhere. What you just have to be able to do is read your chart, and then based on the information your chart is giving you, based on the information you can see on your chart, you take trades. You take trades. You take trades. One thing we have is here we have common knowledge of support, resistance, we buy trade, lot sizing, leverages. Those are those are rigid. Those are concrete. Swap, commission. Those are concrete things you should know before getting in, obviously. But there's no permanent rule. There's no permanent rule. Yeah. So for now, looking at this immediate trend, I'm looking to just sell, 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 sell. So that's just it. I'm looking to sell, 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 sell. So one of the other reasons you could have said you want to sell or you wanted to sell is one, this particular FVG right here, the market like closed below it multiple times, so it has been invalidated. So majorly it just let you know, oh, the market have the tendency to drop from here. Like, so any retracement you see, any opportunity that it gives you a retracement, trust me, the retracement is just a way to just like price buyers in, and then before you know it, it dumps on them. So that's just one thing. It's not as if I'm like a master strategist at trading that right now, but it's something you can always look out for. Like, it's something you can always look out for. The 50% is also like of your FVG, it matters a lot. It's a determining point. It's a determining point. And I'm sure you already know where I saw all of these things that I'm saying. It's just, ICT. Yeah, that's just it. That's just it. So this was like a good entry point. This was a good entry point. See how the market didn't even close below it. See how the market didn't even close below it. Yeah, if I tried to drag it here, we gapped above it actually, but it was decided faster. It was decided faster. It was decided faster. So this would have been a good point to place a trade, or this point, a good point to place a trade. This would have been the better point. But this, good, good, good. Yeah. So from here now, I'm not saying this is a market low or anything. There, nah, that's not me. I'm not saying that. That's not me at all. I don't know the market low, but I can just say, oh, this red market is going to the market has broken this. Obviously, the market is coming here. So based on that, I can say with I can say that there's possibility of Bitcoin coming back down here based on my own observation, not financial advice. Based on my observation, there's possibility of Bitcoin coming as down as this point. Yeah, there's possibility of that because it has cleared this particular FVG here, that's close below it, and then we get the retracement. You know, anything can happen, and that's basically it. That's basically it. So immediate trade, immediate trend, and we are good to go. 1, 2, 3, 4, 5. Oh, we broke it. Oh, it retraced. Let's sell it. We are down here, and that's it. That's it. That's it. So let's check gold. Let's check gold. Um, Gold is doing exactly what we want. Gold is doing exactly what we want for now. Gold is doing exactly what we want. It's doing exactly what we want. But let's just ensure that we are capturing things with utmost precision. That market high is not random. That market low is not random. That's one thing I want you to know. Oh, it closed. Nothing is random in the forex market. You should take every information with utmost importance. Yeah, take it with utmost importance. Nothing is random in the forex market. Nothing. So 468168. 468168. 4692. So okay. So based on that, your entry, yeah. So because of market, what do they call it? Gap, swap, yeah. What do they call it again? What's it called? The difference between the bid price and the difference between the bid price and the and the ask price, basically. I've forgotten the name. Those are just basic terminologies, right? Those are basic terminologies. So because of that, you can just set your trade a little bit here, and then your stop loss just a little bit above here. So yeah, so your entry here. See, if you are trading this on a 0.01, you are basically risking roughly $6. If you are on a 0.02, you're basically risking $12. And then if it goes in your direction on a 0.02, you're basically making roughly, oh no, 0.01, you're basically making $30. 0.02, you're basically making $120. On 0.05, you know the calculation, you are making 30, and if it goes in your direction, you're making 150 on one lot size. On one lot size, you're risking basically 600. If it goes in your direction, you're making 3,000, on 10 lot size. 10 lot size, you're making 6,000, you're risking 6,000. If it goes in your direction, you're making 30,000. So you know how market work. It's just your account balance. So I'm just letting you know. But don't place the trade, please. Don't place the trade. I'm done. I'm done for today. I'm done for today. Yeah. So it was wonderful. I just tried to record the video and just show you. Yeah, I'm back, and it's wonderful being back. It's wonderful being back. And let me see if I can show my face. Let me see. It's calm. I don't know. Let me first of all do this. Um, add source. So I'm showing my face actually. You see the background is not sorry. The background is not cool. The background is not cool. Yeah, so like I said, the background is not cool if I'm showing my face. So I'm basically just in the hostel. Most likely I'll cut it. I'm not showing my face, please. It's God. Oh, I'm already there. My face is showing already. Um, let's see. Let's see. So, okay, we're on this scene. Then we are here. I don't know. Is my face showing? Okay. Transform fit to screen. Yeah. So my face is showing already. Let me take off my glasses. So like the the lightning is not good enough, so the saturation and everything it's not too good. Not too good. So so let me just hang up for today. Hopefully the market goes to the entry point, and if it doesn't, it's okay. That's how the market works.